Man, remember just a few weeks ago, we were all riding that incredible high from October. But now, well, now we're in this holiday cool down, and if you dare to look at social media, you can feel the panic in the air. But here's the big question. Is that panic real, or is it just noise? Let's find out what the data is actually saying.
Welcome to Crypto Today Simply. Today is December 27, 2025.
And that right there, that's the whole point of this entire analysis. The story you're getting from all the online chatter just doesn't match up with the cold, hard facts. So let's dive in and break that data down piece by piece.
All right, so first things first. Before we get into the weeds, let's just get a quick, clear snapshot of where the market is standing as of right now.
So taking a look, we've got Bitcoin hovering around $88,000 and Ethereum is near $2,900. But here's where it gets interesting. Look at the trends. Short term? Yeah, it looks a little shaky. We're seeing a correction for Bitcoin and what we call consolidation for Ethereum. But the long-term picture for both? Still bullish. Why? Well, because the big money institutions are still buying Bitcoin, and Ethereum's tech is getting adopted left and right.
Yeah, 30%. To put things in perspective, Bitcoin is down about 30% from that peak we saw back in October. Now, I know, that number sounds scary. But in the world of crypto, this is what we call a correction. It's a serious pullback for sure, but it is not a market-ending crash.
So the price is down. Got it? That's the surface story everyone sees. But now, we're going to peel back the layers and look at what the technical charts, the fundamental value, and the on-chain data are really telling us. It's a whole different story than just the price tag.
It's pretty interesting, actually. When you look at the charts, Bitcoin and Ethereum are telling two totally different stories. Bitcoin looks like it's trying to find a solid floor to stand on, and its RSI is screaming oversold. Ethereum, on the other hand, is just kind of moving sideways, not really up, not really down. I know that sounds boring, but in crypto, boring can be like a spring coiling up right before it explodes higher.
So I just threw out RSI. What the heck is that? Think of it like a momentum meter for the market. When it gets really low, like it is for Bitcoin right now, it's often a sign that the sellers are just getting tired out and that downward pressure might finally be letting up.
And this right here, this is the huge disconnect I was talking about. While the price looks weak, the fundamentals are anything but. The on-chain data shows the whales, the biggest accounts. They're holding and even buying more, not selling. And over on the Ethereum side of things, the network just got this massive Fusaka upgrade, making it way faster and cheaper. All of this is happening while institutional demand for Bitcoin just keeps getting stronger. The foundation looks solid, even if the price is a bit shaky. This all brings us to the general vibe of the market. Right now, the fear and greed index is pointing straight at fear. That feeling of easy money is gone, and people are definitely nervous. But, for smart investors, that's often a huge contrarian signal. As they say, the best time to get interested is when everyone else is scared to death.
Okay, so there's a lot of uncertainty. We've established that. The big question is, what do you do about it? How do you protect your capital in a market like this? Well, let's walk through a simple playbook.
The single smartest move you can make right now is to not be all in. You want to keep somewhere between 30 and 40% of your portfolio in cash or stablecoins. We call this your dry powder. It's the money you have ready and waiting to buy the dip if we get another leg down. It's your opportunity fund.
Now let's talk about some key price levels you absolutely need to have on your radar. For Bitcoin, if we drop below $69,000, that is a major red flag for this bull market. That's your line in the sand. On the flip side, taking a little profit around $98,000 is a smart move. For Ethereum, you're watching $2,200 on the downside and $3,500 on the upside.
And now for two huge do nots. Seriously. First, do not trade with leverage. These holiday markets have super low volume, which means prices can swing violently and wipe you out in an instant. It's like playing with fire. Second, avoid the meme coins. When the market cools off, these hyper-risky assets are always the first to crash and the last to recover. You want to stick to quality right now.
All right, enough defense. Let's pivot and talk some offense. As we look ahead to 2026, how could you actually structure a portfolio that's balanced for what might come next?
So here's one potential game plan for a balanced portfolio going into the new year. We're looking at 40% in Bitcoin, that's your foundation, 20% in Ethereum for its incredible tech upside, and notice this, a crucial 30% in stablecoins. That's that dry powder we were just talking about. Then you can top it off with a small 10% slice for some of those higher risk but high reward speculative plays.
And here's the why behind this setup, because every piece has a job to do. Bitcoin is your anchor, your digital gold. Ethereum is your growth engine, your bet on the future of this technology. Those stablecoins, they're your opportunity fund, patiently waiting. And that small bag of altcoins is where you take your calculated shots on exciting new stuff, like AI or Web3 game.
Okay, let's bring it all home. Let's land the plane. After looking at all this data, what's the final verdict? Is it time to panic, or is this just a much-needed pause?
When you crunch the numbers, the data suggests there's about a 60% chance that the next few weeks are going to be pretty choppy and boring, just sideways action. But if you look out over the next 6 to 12 months, there's a 70% probability that we see higher prices if, and this is a big if, that $69,000 level for Bitcoin holds. So the long-term outlook is still strong, you just got to get through the short-term noise.
And I have to be crystal clear about this. Remember, these are probabilities, not guarantees.
So I'll leave you with this question to think about. Is this a healthy pause that's letting the market catch its breath and build a stronger foundation for the next leg up? Or is this the first warning shot of a long, cold bear market? The data is pointing towards a healthy pause, but in the end, only time will truly tell.
If you want daily crypto market reports and tips for trading, subscribe to Trade Compass and turn on the notifications, or hit the bell.